Hi, everyone. I hope you're enjoying ARM Startup Day so far. My name is Nick Kepler, and I am the COO of Silicon Catalyst. We're an incubator that focuses on supporting semiconductor hardware startups. We work with them from idea through prototype and on to volume production. And today, I'm joined by my friends Faris Mubarak at Spark Microsystems and Mark McDowell at Real Ventures. We'll be talking with you about Spark Microsystems' journey as a successful wireless communications startup. And in particular, we'll be focused on how they have secured investment, starting with Real Ventures and the process they went through and some of the tips that you should know as you try to secure funding. This is a really important topic because starting a semiconductor hardware startup can be really expensive. And we try to do things at Silicon Catalyst to help our startups, such as providing in-kind partners that provide EDA tools and shuttle wafers and test equipment, et cetera. But you still need to raise some money. And that process is hard to navigate, and Faris and Spark Microsystems have done it well. So Faris, welcome, and why don't you go ahead and introduce yourself?
Thank you, Nick. Hi, everyone. I'm Faris Mubarak, CEO of Spark Microsystems. I joined Spark in December 2017, interestingly enough, right after we closed our seed round. I was an advisor during the seed stage, though, to the company. I have more than 30 years of experience in the semiconductor industry. Spark is a Montreal-based Canadian company that offers innovative short-range communication transceiver. It is my pleasure to introduce Mark McDowell, partner at Real Ventures, a Spark board member and lead investor.
Thank you, Faris, and thank you, Nick. My name is Mark McDowell. I'm one of the co-founders of Real Ventures. We are, I believe, Canada's largest and most active early stage investment fund. We've deployed about $350 million into more than 100 startups in North America since our founding about a decade ago. We like to be the first check that goes into a company, beyond the friends and family. So our minimum check size is $500,000. We'll typically invest maybe $6 million into a company during the life of that company. I'm an engineer by education. I spent half of my career as an entrepreneur in the wireless industry. And so at Real, I tend to look at our wireless and semiconductor and other deep tech investments. We got invested into this company in large part because Silicon Catalyst had already kind of shown us the way. And we'll explore that more during the meeting today. But I'm grateful to Nick and the team there for helping to de-risk this investment for us.
Mark, you've talked with, obviously, lots of startups to have made all the investments you've made. What advice would you give to startups that are looking for early stage funding, maybe with some examples from Spark's experience?
Yeah. Well, in no particular order, I think that the first time you talk to a particular investor, ideally, you're not asking for money. Ideally, you're developing a relationship and you're starting to build some trust and some shared vision. And by the time you come around to asking for money, there's already a bit of relationship capital on both sides. Especially at the very early stage, before a company has established a product market fit and before there's revenue, the only thing we have to go on is our impressions of the founding team and their capabilities and maybe their intellectual property that they've developed. And so it is important to build a relationship and to explain why you're different and to share what the vision is. There's a lot more I could say, Nick, but I guess the second point that I would make is, especially in the early stage, we want to know that the company is in the right, is in the right jungle, not just climbing the right tree, but that they're in the right jungle. And by that, I mean, we want companies that are addressing very large markets. Spark is, in a way, taking on something pretty ambitious. They want to be the next generation beyond Bluetooth. And Bluetooth is something that we all use every day in our cars and in our headsets and on our phones. And the opportunity to kind of follow along to whatever the next generation and that's going to be, that was a very big exciting story for us.
Okay, good. Thank you. Yeah, the idea of chasing a large market is a pretty common theme for most venture capitalists, and it's one that a lot of startups miss, and they expect a VC to invest in them when they're going after relatively small markets, and that's generally not a good fit. Your other point, I think, is a more subtle one. We routinely tell the startups in our portfolio to not go talk to investors when you're raising money. Talk to investors before you're raising money for exactly the reasons you described. And that's something that very few entrepreneurs seem to understand. I think it's a really important foundational point for them.
Nick, I'll just add on to that. If there's any entrepreneurs listening today, if a VC tells you no, ask if you can continue to send them your regular progress reports, because there have been plenty of occasions where we've passed on an investment, but the entrepreneur has remained interested in us and sent us regular updates on the business, and again, slowly building that relationship until it comes around to a yes.
Yeah, very good. Faris, do you want to add some insights on securing funding from your perspective beyond what Mark said?
Absolutely want to avoid duplicating what Mark and you said, because I totally agree. But again, in the case of Spark, it was clear from the beginning that the market was sizable and has known, proven problems. That's important. You have a compelling and innovative solution that is well protected and differentiated. We understood this was key, and indeed, it is key to all investors. And don't want to underestimate the value of a credible, inspiring team. I mean, the investors, early stage investors, seed investors, are investing in the founding team. That's who they're investing in. That is important. We had a clear vision. You have to have a clear vision. It will evolve as you go forward, but it always need to be crisp and justified. You have to have a process for how you do things. It shows well thought through process, and it builds credibility and trust. Credible market traction is important at every stage. You might have talked with your original MVP to a couple of investors. It's important. Having credible market traction is important. And that vector should be moving up and to the right as you move forward in your life as a company. And an important part, which you learn always, is clearly articulate aggressive yet achievable goals for the medium term. You don't want to, nobody undersells, you don't want to oversell. You want to say what you want to do for the next step with that money. It builds that credibility. It builds that trust. They want to tag along the journey with you. They want to join you. They want to help you. At Spark, our founders were incredible. I mean, they really inspired a whole set. They inspired me to leave Silicon Valley and come and join a startup in Montreal. They inspired John East to become an independent board member. They sold that huge market, that apparent market, to real and other investors. So, and they had a very, very efficient, execution plan. And we'll talk about that a bit later, perhaps. Have a plan. Having a plan will help you execute and will allow you to navigate challenges, delays, and surprises. They will be abundant. It's not a matter of if they will come. It's when they will come. They will happen. And lastly, as you secure the investor, engage your board in your progress. Engage them in the problems and the solutions. They are your partners. They're not that body that you have to just decide what to tell them and what not to tell them. Engage your board. That can be a tremendous asset. Thanks.
Yeah. Faris, is there anything on the other side of that coin? Is there anything you would tell your former self to do differently? So specifically in the area of raising funding, not in all areas of life.
In the world of early stage startups, you're always fundraising. So anything you wish you had done differently before is an opportunity to improve and do it better in the future. It will be coming. So to that effect, in my case, yes. Everybody touched on nurturing the investor relationships. This is the CEO job. And I can do better at that, and I will do better than that. And CEOs are always busy, but operational busyness is never an excuse to not do that task. This is the number one job. So that's one thing I will talk about. Your pitch has always to evolve and always be honed. You know, you need to continue working on that. No matter how good a job you do, there is a better job to be done. You evolve it, and then continue at setting the right expectations appropriately as you move forward to continue building the same level of trust and expectations. This is a particularly important point. Nobody in the startup world undersells. Everybody wants to hype the situation. But if you oversell too much, it can have one of two negative side effects. One, it could create a loss of credibility with the investor. But two, it might raise the expectations to a point where it might delay a funding decision. Oh, if it's making this much progress, maybe I'll wait a little bit longer to see it before I invest. And that's a bad thing. So you really need to set appropriate expectations to achieve your goal of raising the funds when you need.
Yeah, thanks, Faris. I think that's a really good point there. There's a fine balance between the tendency of a technical founding team to be engineers and only promise what they're absolutely certain they can deliver, and to go beyond to the other side and promising way more than they can deliver because it's what their potential investors want to hear. And establishing credibility is really important. Yes. So Faris, we've gotten onto a discussion here of partnerships. We regard those as being really critical at Silicon Catalyst. We've tried to pull together an ecosystem with a large number of companies and investors and individuals. Can you tell us your perspective on the importance of partnerships and collaboration for small startups like Spark Microsystems?
Great question. And the answer in one word is absolutely essential. Silicon Catalyst and Centec, to a degree in Montreal, and their respective elaborate ecosystem were integral to our progress. You guys had a vision. You got to have a vision how to reduce the barrier to entry. And you got it right. The Spark founders believed in it. They applied to that incubator and they bought onto the vision. Now, the advisor network, the know-how, the in-kind partner support, the network ecosystem allowed us to execute faster and at lower cost, much lower CapEx than needed. Let me give specific examples. John East, a Spark board member and earlier an advisor, and I, as a CEO, were introduced to Spark through Silicon Catalyst. The in-kind partners offer invaluable services, whether it's Synopsys, TSMC, Ansys, Advantest, ARM, Silicon Valley Bank, EAG, the large VC network. The list goes on. And I'm proud to say that Spark leveraged almost absolutely every single one of the resources that were available to it. Now, it doesn't fall in your lap. You have to work for it. You might have to change your design flow. You might have to do certain things differently. And you cannot think necessarily, oh, that's going to take a little bit of time. I don't want to focus on that. This is important in the long term. And we did that. We leveraged it. Now, as a side note, I want to touch on something. Spark has a compelling, revolutionary short-range radio solution. This level of innovation bucks industry trends and standards. So of particular importance to us was to run our entire software stack, our entire system on standard MCU platforms. Well, the undisputed leader in embedded applications is ARM. And we standardize on that in our demo kit through our MCU partners. But then the decision to evolve our roadmap, and at some point we're going to get to integrating an MCU subsystem with our transceiver monolithically on a single chip. We all know IP is expensive, but ARM figured it out. They offered the flexible access plan, and this is what enables us. This is what helps us figure out what IP we want to use, what MCU subsystem, what peripherals, experiment, get it done, and defer the massive investments, the big investments, until such time when you're ready to go to production with that. That's invaluable, and that goes to the heart of that in-kind partner ecosystem. So you, as a startup, need to seek these partnerships and take the necessary steps to nurture them and leverage them. They're not going to fall in your lap. They're going to require work, and we're not entitled to that support. We have to work for it, but it's there if you find it. And I will summarize it by giving you just an example for Spark, which I think will be compelling enough. We were able, by leveraging all of the in-kind partners, the ecosystem, and the grants and non-equity funding, we were able to tape out, and the university system, of course, initially to get the research out of the R&D, we were able to tape out our first production mask set with $1.1 million of equity investment. This is not a trivial achievement in the semiconductor industry by any stretch of the imagination. So it works.
Our in-kind partners at Silicon Catalyst provide a variety of things at no cost: EDA tools, shuttles I've mentioned. We didn't start to add IP until we'd been around for several years and really established ourselves. As Mark said, with an entrepreneur engaging with an investor, the same was true of Silicon Catalyst engaging with an in-kind partner network. We were able to start acquiring in-kind partners in the IP space only about 2 years ago. And our ask of ARM for what we wanted them to provide and the terms under which we wanted them to provide it wasn't as much as the flexible access program that they were about to roll up when they joined us 2 years ago. It's really a terrific program. And as you say, it doesn't just defer the cost until you're at a point where you're in production. But one of the things that we've really noted about it is the flexibility of being able to look at different pieces of IP before committing to a production tape out. Because for many startups, the world is uncertain, and it's more uncertain for startups. And you don't necessarily know which IP you're going to use. So the idea of licensing IP for a high cost and then needing to change your IP is just unfathomable for a startup. And the ARM Flexible Access Program avoids that problem. It's really a good program. So let's close here with one last question for each of you. If you're talking to an early stage semiconductor hardware company today, what's your one key piece of advice for them? Mark, why don't you start?
Nick, it's hard to boil it down to one. I will say this: when I meet with a founding team, I always start out by saying, "Hey, raise your hand if you're responsible for selling at this company." And anybody that doesn't have their hand up, I tell them they're fired. What I mean by that is, in a startup, everybody is selling. You're either selling to a customer, or you're selling to a partner, or to an investor, or to a board member, or to your spouse, or to employees that you want to hire. So hustle. You can't beat hustle, whether it's semiconductor or software or anything else. I know that's kind of generic, but I think that's probably what I want to end on. Everybody is in charge of selling all the time.
Yeah, that's a great tip. Great tip. Ferris, how about you?
It's a beautiful tip. I want to say it a little bit differently. The fundamentals are there. You guys, you entrepreneurs are brilliant. You know your market, you know your solution. Yes, you have to have all the fundamentals. That's great. But ultimately, it's selling. And to do that, you need to nurture your network and hone your pitch, no matter who you're selling to.
It's been a pleasure speaking with the two of you today, Ferris, Mark. Silicon Catalyst exists to help semiconductor hardware startups. Ferris, it's been wonderful to have Spark join our incubator back in 2016, as you said. Mark, we really appreciate your involvement, not just with Spark, but the way you've connected with the rest of us at Silicon Catalyst, introduced us to other startups. It takes a village, and you're both part of the village that we've created, and it's a lot of fun. I'll hand over to you guys to say goodbye.
Nick, thank you, and the team at ARM. I really appreciate you all giving us a platform, and most of all to the entrepreneurs who are tuning in. Solve big problems. Be ambitious. Don't shy away from hardware if that's what it takes. And good luck to everybody out there.
I want to add to what Mark said in thanking certainly ARM and Silicon Catalyst for giving Spark Microsystems the opportunity to share our exciting journey with you today. It does take hard work, and it takes a complete story. Luck can certainly help and leverage it when you have it, but you cannot count on it.
And thank you all for watching. I hope you enjoy the rest of ARM Startup Day. And Ferris and Mark and I, we all look forward to meeting you up in the village of startup entrepreneurs. Bye for now.